In 1901, a deal closed that most people have never heard of, for a company most people couldn't name, and it quietly created the blueprint for how the world's wealthiest families would manage their fortunes for the next 125 years. John D. Rockefeller, already the richest man in America, owned a sprawling, chaotic personal portfolio, riddled with bad investments, mismanaged assets, and outright fraud he didn't even know he was exposed to. So he did something almost nobody had done before at that scale. He hired a personal team, gave them complete access to his finances outside of Standard Oil itself, and let them run his fortune like a business in its own right. That team found a half-forgotten iron ore property in Minnesota that nobody else wanted. They held it. They waited. And when U.S. Steel formed in 1901, that single property alone generated a profit reported at $55 million, an almost unimaginable sum at the time, instantly making Rockefeller the second richest man in America, behind only Andrew Carnegie. That team had a name, the family office. And the structure it pioneered now controls, by conservative estimate, more than $12 trillion globally, quietly, almost invisibly, shaping private markets, corporate ownership, and global capital flows in ways that almost never make headlines. Today we're naming names. We're going inside the specific family offices, old money and new, but all built on the same underlying architecture that genuinely do control billions, sometimes hundreds of billions, of dollars in assets, real entities, real figures, real holdings you can verify yourself. If you want the real names, the real numbers, and the real mechanics behind dynastic wealth, not the surface-level version, subscribe now. This channel goes deeper into this world every single week than almost anywhere else on YouTube. The scale nobody talks about. Before we name individual families, it's worth establishing just how large this entire category of capital actually is, because the scale tends to surprise even people who follow financial news closely. Industry research now places total global family office assets under management above $12 trillion, a figure that has grown at roughly 6 to 8% annually over the past decade, outpacing the growth of traditional institutional allocators like pension funds. Within that $12 trillion universe, the concentration at the very top is extreme. The largest 29 family offices alone are estimated to manage a combined $3 to $4 trillion, and within the top 10 globally, cumulative assets exceed $1 trillion. A figure larger than the GDP of most countries on Earth, including wealthy nations like Switzerland. To put this in perspective, using an institution most people have actually heard of, Harvard University's endowment, the largest academic endowment in the world, was valued at roughly $50 billion in recent years. If Harvard's endowment were a family office, it would rank only around 11th place globally, smaller than at least 10 single families' private investment offices. This is the scale we're discussing, not wealthy families in the conventional sense, family offices that, individually, rival or exceed the balance sheets of major sovereign wealth funds and global asset managers, while remaining almost entirely outside public visibility, public reporting requirements, and public scrutiny. Let's go inside the specific structures. Walton Enterprises, the largest family office on Earth. The architecture behind the world's biggest fortune. The largest family office in the world, by assets under management, belongs to a name almost everyone recognizes, attached to a structure almost nobody has heard of. Walton Enterprises, headquartered not in New York or London, but in Bentonville, Arkansas, the same small city where Sam Walton founded Walmart in 1962. The numbers here are genuinely staggering. Estimates place Walton Enterprises' total assets under management at well over $200 billion, with some independent analyses placing the figure considerably higher once the full scope of family holdings is accounted for. The core of that fortune remains a concentrated equity position. The Walton family, through Walton Enterprises and the related Walton Family Holdings Trust, controls approximately 50% of Walmart's outstanding shares. With Walmart's market capitalization exceeding $680 billion, this single concentrated position represents, by a wide margin, the largest wealth block held by any family office anywhere in the world. What's particularly instructive about Walton Enterprises, for understanding how modern dynastic capital actually operates, is its structural design, a deliberate hub-and-spoke model. The central entity pools family capital for economies of scale and shared infrastructure, while satellite offices manage the individual priorities of specific family members. Jim Walton, Alice Walton, Rob Walton, Lucas Walton, and the broader extended family, each with combined individual net worths now estimated well into the hundreds of billions collectively. A dedicated investment arm known as WITE LLC and launched in 2020 manages public equity exposure outside the core Walmart position, holding direct stakes in companies including Apollo Global Management and Snowflake, alongside diversified index exposure. Beyond retail, where Walton capital actually flows, it would be a mistake to think of Walton Enterprises as simply the Walmart family's money. In practice, the office has become a genuinely diversified institutional investor, with direct holdings spanning private equity, venture capital, energy infrastructure, and impact investing. The family has been an early backer of companies, including electric vehicle manufacturer Rivian and payments company Checkout.com, and maintains renewable energy infrastructure investments spread across 11 different U.S. states. The Walton Family Foundation, the office's primary philanthropic vehicle, distributes several $100 million annually. Recent figures put the number above $500 million in a single year, focused on K-12 education reform, environmental conservation, and economic development, specifically within Northwest Arkansas, the region the family's fortune originated from. This is, in many respects, the modern template for old money capital at the absolute largest scale. A single dominant operating company position, generating enormous wealth over decades, gradually diversified outward into private markets, infrastructure, and philanthropy, all coordinated through one family-controlled structure that answers to no outside shareholder and faces no external redemption pressure whatsoever. Rockefeller, the original template, still operating today from Standard Oil to a $187 billion modern platform. If Walton Enterprises represents the largest family office by sheer assets, the Rockefeller family office represents something arguably more significant for this video's purposes. The original template, founded in 1882, that every other structure discussed today ultimately descends from, and one that remarkably is still operating in recognizable form nearly a century and a half later. The original Rockefeller office was established specifically to manage John D. Rockefeller's personal fortune separately from Standard Oil itself, eventually employing a dedicated team that included Frederick Gates, the figure credited with engineering the Mesabi Range iron ore investment described in this video's opening. Over the following century, the structure expanded steadily. By 1992, the family office's in-house trust company was managing nearly 300 separate family trusts on behalf of roughly 100 family clients, having grown well beyond serving the Rockefellers exclusively. That evolution continued in 2018, when the firm was reorganized into what's now called Rockefeller Capital Management, following an investment by Viking Global Investors that gave the firm additional institutional backing, while Rockefeller family members retained a minority ownership stake. As of the most recent disclosed figures, Rockefeller Capital Management reports being responsible for approximately $187 billion in client assets across its three core divisions: the Rockefeller Global Family Office, Rockefeller Asset Management, and Rockefeller Global Investment Banking, operating from over 50 offices across the United States and an additional office in London. It's worth being precise here about what this figure actually represents, because it's easy to conflate two different things. The modern Rockefeller Capital Management platform now serves many wealthy families beyond the Rockefellers themselves, functioning as what's known in the industry as a multifamily office. The Rockefeller family's own specific holdings within that broader platform are not fully disclosed publicly. Family records of individual and collective net worth have historically been kept closed to outside researchers. But separate estimates of the dedicated Rockefeller family office, serving the family's roughly 250 living descendants, directly put their collectively managed wealth above $10 billion, a figure that, while modest compared to Walton or Gates-scale fortunes, reflects a dynasty now 7 generations removed from the original wealth-creating event, having successfully avoided the shirt sleeves to shirt sleeves pattern discussed in this channel's earlier videos on family governance. Education as infrastructure, the Rockefeller Next Gen model. One detail about the modern Rockefeller platform deserves particular attention because it connects directly to this channel's previous coverage of hidden mentorship networks and family governance. Rockefeller Capital Management now offers a formal 12-month next-generation education curriculum to client families, a program explicitly modeled on the internal curriculum originally developed for training the Rockefeller family's own 7th generation. This is a striking, fully documented example of exactly the kind of structured air education discussed in this channel's Mentorship Networks video, now packaged as a literal commercial service, meaning families with no historical connection to the Rockefellers whatsoever can now access training methodology that was originally developed, refined, and tested internally across 6 generations of the wealthiest family in American history. If you haven't seen our video on hidden mentorship networks yet, this Rockefeller Next Gen program is a perfect real-world example of everything covered there. Go check it out after this one. For now, drop a comment. Which family office in this video surprised you most so far? Cascade Investment, the new money office built like old money. Bill Gates' $175 billion holding company. Not every entry in this video traces back to a 19th century dynasty, and it's worth including at least one modern example specifically because it illustrates how thoroughly today's largest new fortunes have adopted the old money family office template rather than inventing something new. Cascade Investment, the primary investment vehicle for Bill Gates, was established in 1995 and is headquartered in Kirkland, Washington. Cascade filed SEC disclosures in 2024, reporting $153 billion in regulatory assets under management, a figure that notably excludes the separate Gates Foundation endowment, direct real estate holdings, and private operating companies, meaning independent estimates of Cascade's true total managed assets run considerably higher, with some analyses placing the figure near $175 billion. What makes Cascade particularly instructive is its deliberately lean, concentrated structure, overseen for nearly 3 decades by Chief Investment Officer Michael Larson, rather than the large multi-service staff model used by an office like Rockefeller's. Cascade operates with a holding company architecture, centralized decision-making, a relatively small core team, and concentrated positions in a handful of major holdings rather than a broadly diversified portfolio. Disclosed public positions have included a substantial stake in Berkshire Hathaway, alongside Canadian National Railway, Deere & Company, Waste Management, and Caterpillar, a portfolio deliberately weighted toward capital-intensive, inflation-resistant operating businesses, echoing exactly the hard asset preference discussed in this channel's video on how old money uses inflation to its advantage. Cascade's holdings extend well beyond public equities. The office has become, by some measures, the single largest private owner of farmland in the United States, controlling approximately 275,000 acres, and holds a majority stake in Four Seasons hotels and resorts. Following Gates's 2021 divorce, the structure was formally divided. Roughly $58 billion was transferred into a newly created separate family office for Melinda French Gates, called Pivotal Ventures, illustrating in real time exactly the kind of structural adaptation family offices must sometimes undergo through major family transitions. Why Cascade deliberately separated from the Gates Foundation? One governance detail here is worth highlighting specifically because it reflects a sophistication point relevant to several family offices. In this video, Cascade Investment and the Gates Foundation Endowment are deliberately kept as entirely separate entities, with the foundation's investment portfolio holding no Microsoft shares whatsoever, despite Microsoft being the source of the family's original fortune. This separation exists specifically to prevent what's known in family office governance as mission drift, a scenario in which a foundation's investment decisions become entangled with or constrained by loyalty to the family's original operating company, creating pressure to avoid actions, such as selling a large stock position, that might be perceived as a vote of no confidence in the founder's own legacy business. This kind of deliberate structural separation, designed specifically to protect long-term decision-making from short-term reputational pressure, exemplifies exactly the kind of governance sophistication this channel has covered in its videos on family constitutions and dynastic governance more broadly. The Wallenbergs, Europe's quietest dynasty, a century and a half of controlling influence through a public company. Every family office discussed so far in this video has been American. It's worth crossing the Atlantic now because Europe's old money tradition has produced what may be the single most sophisticated and least understood family office governance structure anywhere in the world: Sweden's Wallenberg dynasty. The Wallenberg family's wealth, estimated at roughly $165 billion in concentrated industrial and technology holdings, is managed through a structure unlike anything else profiled in this video. Rather than a purely private single-family office, the family's control flows primarily through Investor AB, a publicly traded holding company in which the Wallenberg family holds a minority of total shares, but a dramatically disproportionate share of voting power through a dual-class share structure, granting 10 votes per A share against a single vote per B share. This structure, maintained continuously since the early 20th century, allows the family to retain effective control over a vast industrial empire while technically owning only a modest fraction of the company's total equity. This is genuinely one of the most elegant pieces of dynastic financial architecture in the world, and it solves a problem every other family office in this video has had to solve in a different way. How do you maintain absolute family control over an enormous pool of capital across many generations, while still accessing public capital markets for growth? The Wallenbergs answer: separate voting power from economic ownership through a dual-class structure, then layer family foundations on top, holding the controlling voting shares, has allowed the family to influence companies across Swedish industry and global technology for over a century, while the underlying foundations, the Knut and Alice Wallenberg Foundation chief among them, simultaneously fund a substantial portion of Swedish scientific research, creating a philanthropic legacy running in parallel with the family's commercial influence. The architecture these families share. We've now profiled 4 genuinely different family offices: American retail wealth, the original 19th century industrial template, a modern technology fortune, and a century-old European industrial dynasty operating through public market structures. On the surface, these look like 4 unrelated stories. Underneath, they share a strikingly consistent architecture. First, concentration, not diversification, at the core. Every family office profiled in this video holds the overwhelming majority of its value in a small number of deeply understood positions. Walmart for the Waltons, the original Standard Oil-derived capital base for the Rockefellers, Berkshire Hathaway, and a handful of operating businesses for Cascade, Investor AB's industrial holdings for the Wallenbergs. This directly contradicts how institutional capital, pension funds, mutual funds, endowments typically operates, spreading risk across hundreds of positions. Family offices at this scale do the opposite, because deep operational understanding of a small number of businesses built over decades or generations is treated as a more reliable form of risk management than statistical diversification. Second, structural insulation from external pressure. Every structure discussed in this video, the Walton's hub and spoke model, Cascade's holding company architecture, the Wallenberg's dual-class voting structure, exists specifically to ensure that family control over capital allocation cannot be diluted or overridden by outside shareholders, public market sentiment, or short-term performance pressure, even in cases like the Wallenbergs, where some of the underlying capital is technically publicly traded. Third, the deliberate separation of family control from public accountability mechanisms. None of the 4 offices in this video are required to disclose anything close to their complete holdings, complete governance structure, or complete decision-making process to the public. Even Cascade's regulatory filings, the most transparent of the 4 by necessity of U.S. securities law, capture only a partial view of total assets. This isn't evasion of any legal obligation. It's simply the natural consequence of structures designed, from their founding, to answer to one family and no one else. If this kind of real name, real number breakdown is valuable to you, share this with someone who'd find it genuinely fascinating. This is the kind of factual depth most channels in this space don't bother with. And let me know in the comments, which structure do you find most clever? The Walton's hub and spoke model, or the Wallenberg's dual-class voting trick? Why this scale of control stays so quiet, it's worth closing with a direct examination of why structures controlling this much capital remain so far outside public conversation because the honest answer, much like in this channel's earlier video on hidden mentorship networks, is more structural than conspiratorial. Part of the answer is simple regulatory design. In the United States, family offices that meet specific criteria, serving only family members and close associates, with no outside clients, are explicitly exempted from registering as investment advisors under the Investment Advisors Act, a carve-out created specifically because family offices were understood by regulators to be fundamentally different from institutions managing other people's money. This exemption is precisely why Cascade Investment's regulatory disclosures capture only a partial picture of total assets, and why most of the family offices profiled in this video disclose far less publicly than a comparably sized pension fund or mutual fund would be required to. Part of the answer is also simply that these structures predate and exist somewhat outside of the modern financial media's usual frame of reference. News coverage of finance overwhelmingly covers publicly traded companies because public companies are required to disclose quarterly results, file with regulators, and hold earnings calls that generate easily reportable information. A family office holding $50 billion in private family-controlled assets generates none of that disclosure obligation, and therefore generates almost none of the corresponding news coverage. Not because anyone is hiding it, but because the entire modern apparatus of financial journalism is built around public disclosure requirements that these structures were specifically, legally designed to fall outside of. The result is exactly the paradox this video opened with. Structures controlling, individually, more capital than the GDP of entire countries, operating with almost no public visibility whatsoever, not through concealment, but through a combination of deliberate legal design and the simple fact that private capital generates no public paper trail by default. Let's bring this together. $12 trillion globally. Walton Enterprises alone controlling a position larger than the GDP of most nations. A 19th century structure originally built to fix one chaotic personal fortune that's still operating in recognizable form 140 years later, now training the next generation of entirely unrelated wealthy families. A modern technology fortune that deliberately built itself using the exact same architecture as the dynasties that came before it, and a Swedish industrial family that solved the problem of permanent control through a piece of corporate structuring so elegant it's persisted, largely unchanged, for over a century. These aren't separate stories. They're the same story, told 4 different ways. Concentrated capital, structurally insulated from outside pressure, controlled by a single family, operating with almost no public accountability. Not illegally, not secretly, simply quietly, because quiet was never against any rule to begin with. That's the actual scale of old money family office capital in the world today. Not a conspiracy, a documented, verifiable, almost entirely legal architecture, controlling more capital than most people will ever fully comprehend, hiding in plain sight simply because almost nobody thought to go looking. Now you know exactly where to look. If this gave you a genuinely new picture of how much capital these structures actually control, subscribe now. We break down the real mechanics and the real names behind generational wealth every single week, with the kind of factual depth most finance content never bothers with. And if you want to understand exactly why families build structures like these in the first place, go watch our video on why old money dynasties use private family offices instead of retail banking. It's the perfect companion piece to everything covered today. Let me know in the comments which family office in this video you'd never heard of before. I read everyone. I'll see you in the next video.